Hi, I'm Bob Voss, also known as New Business Bob. Welcome to the New Business Bob Show. As you can see, my buddy Larry, the accounting guy, is here, and we're going to be talking about a topic today involving assets or things that you buy for your business. Now, Larry, I believe that if I buy something for my business, I can immediately write it off that year on my taxes, right?
Not right.
Not right.
No.
Oh, crap. Okay.
So if you buy something that lasts more than a year, is expected to last more than a year, it's an asset and it needs to be depreciated. Also, if you go out and buy 1,000 widgets for resale, you can't expense those until you sell them.
That's inventory, right?
That's inventory.
So if I go out and buy 1,000 books, I can't write off or write off 1,000 books. I can only write the cost of those off when I sell them, right?
As you sell them. Correct.
Okay. Okay, right now a lot of new business owners are starting out, and the first thing they're going to go out and buy is a new computer. Everybody needs a new laptop or a new desktop or something like that. How does that work?
So in 2013, the IRS had issued a Treasury decision that they called de minimis assets, meaning of small, Latin.
Okay.
So if you have an accounting policy in place prior to the beginning of your year or at the beginning of your year if you're just starting up,
okay,
you can deduct up to $500 per asset, and they're not considered an asset at all.
Okay.
Now you could buy 20 $400 computers, $8,000 expense, and write the entire $8,000 off.
Okay, so I just got a new laptop for New Business Bob. It was like $400. I can write that off this year, right?
If you have the policy in place.
If you have the, I have to set an actual policy for my business?
You have to have an accounting policy in place to cover yourself.
Okay, but you're going to do that for me, right? Because you're Larry the accounting guy.
If you've come to me ahead of the time, yes, I will.
Oh crap, I didn't come to you ahead of time. Now what am I going to do?
You want to get accountants involved early because they know what you don't.
Okay, so that's a computer. Let's say we've got in front of us, we've got $5,000, $6,000 worth of video cameras and lights and mics and everything. Can all that be written off?
Absolutely not. They're over $500. They're going to have to be depreciated over a period of time, 5 or 7 years.
Well, how do you know how do you know if it's 5 years? How do you know if it's 7 years?
The IRS has a number of lists of assets, types of assets, that tell you how long the life of that asset is and how long you have to take to depreciate
So
it.
either somebody's got to go to like irs.gov and look up this stuff, or they come to you.
Or they come to me.
Or they come to you because most small business accounts would know this, right?
Right.
Okay, what about vehicles? We had another video we were talking about the mileage deduction. There's two ways of writing off your vehicle in that. One is just take the mileage deduction, which is what I do at New Business Bob. But another way is if you buy a vehicle, you can then write that off or depreciate it, right?
You should put it in the business name.
Okay.
And you want to make sure for it to really be worth your while that you're putting at least 2/3 of the miles on that vehicle are business related.
Are business related,
Right.
Okay.
There's a catch. If the first year you put it in, you use that depreciation method, you are locked into that for the life of the vehicle.
Okay, so that's the only, you can't then be taking mileage deduction then or go back and forth, right?
If the first year you take standard mileage, then in year 2 you have a choice which method you use.
Okay. Going to throw you a curveball.
Go ahead.
What happens if I go out and for New Business Bob and I lease a vehicle in the name of New Business Bob? I'm not buying it, I'm leasing it. What do I do?
You have the same issue as if you purchased it. The lease could be business deducted, but only the business percent. You still have to keep track of the mileage you drive and whether they're personal or business and prorate accordingly.
Okay, so as an example, if I go out and buy a Ferrari for $200,000 and put it in the name of the business, or I'm leasing it, I don't buy it, I'm leasing it for $5,000 a month. This is really getting off the top, isn't it?
That's all right.
Okay, and let's say I drive it for business miles 60% of the time. Then if that is the truth, I can write off 60% of $5,000 or $3,000 a month. Is that correct?
You'd like to think so, but there's also limits.
There's always limits with
There's
the IRS,
always
aren't there?
limits that say that's not reasonable. So they have section 280F, which states this much is the maximum allowed per year.
Okay, one other question. What is I keep hearing this, what is a section 179 deduction?
So under certain circumstances, even if you have $5,000 worth of camera equipment, you can accelerate the depreciation in the first year. And there are a number of different rules. How many assets did you purchase? What's the dollar limit for the year? What's your income for the year? But if all those things match up, then you can accelerate that depreciation and possibly deduct that $5,000 all at once.
In 1 year. That's what the section 179 deduction is.
That's right, if you meet the criteria. And there's a lot of what ifs to get there.
Okay, so that's where you come in again, right?
Make sure the numbers work and we'll get you the maximum allowed deduction. Although you don't always want the maximum allowed deduction. If you're looking to refinance your home, you you may want to show a little more income and defer that depreciation.
Oh, because it gets you a better mortgage, right?
That's right.
Okay, so there's a lot of things.
There's a lot of things to think about.
If you haven't figured this out, every new small business owner needs a guy like Larry the accounting guy to help them through all this stuff.
And start early, because if you don't have policies in place, you've already stopped a deduction from happening.
Oh, crap. Okay, thanks, Larry. Thanks for watching this video, and thanks for being part of the New Business Bob Show. And Larry's going to be coming back because he's going to help me. He's going to continue helping me. Thanks for watching. Take care.